if you have funding from your own clients, meaning revenue from your own clients. This is always the best case, no matter if you also want to raise funding from VCs or not.
Welcome to the Never Employed Chat. My name is Sam, and I interview people who make a living beyond salary jobs, entrepreneurs, business owners, and investors, so that we can learn from their stories together. There are many great ways to make a living, and even more ways to wealth. At Never Employed, we encourage you to think of alternatives to employment jobs. What would you do if a salary job was simply no option? On your personal website, I found that you started to build your first own businesses at the age of 13. Which kind of projects or businesses did you build back then, and do they still exist?
That's a really, really great question. Back then, I somehow came in contact with the first website builders at that time, and also educated myself about HTML and the first programming languages like PHP and everything. And at first I started out building projects for my own. So I built websites for my school, for my class, but also my sports clubs and everything. And it was always so much fun to do that. And then at some point I became part of a huge online community here in Germany, where you could basically trade your work against a digital currency. Was almost something like the Bitcoin of that time. And it was so funny to see that a lot of older people in the 30s or 40s were paying me money for my services. And back then, it was everything that ranged from building a website for them to coding little snippets, but also creating banner ads, social ads, and some of these things. And so I started out with the most basic agency business, you could say, but then quickly realized that I have way more fun building products that can be scaled in a way. And I was always excited at that time about browser games. So there were a bunch of different ones from, topics around the emperors, the Vikings, and then something in space and everything. And I created a browser game that was in this mafia scene. So you could sign up for an account and then create your own mafia family, and you could earn more coins and develop your own family, buy stuff, weapons, cars, and everything. And I always try to add new features on top of that. And on the other side of things, I monetized the whole website through ads at that time. And back then, you could earn quite a lot if you put banner ads or something on your website. And so this was my kickstart into the entrepreneurial life.
Yes, sounds that you already developed a quite high value skill at the very early age, web design, programming, coding in general. Do you think this is something what helps people in general to build successful businesses, so to build high value skills?
Yeah. 100%. So for me, one of my core values for myself is learning new skills and learning new stuff. And this was ever since I can imagine a thing that drove me. And so for me, it felt very, very natural to learn these skills. And I was so interested in this kind of technology and to see, okay, I can create something with my own hands and then it appears somewhere in the web. And this was so exciting to see that. And to be honest, back then, not so many people had the skills to do that. So even with shitty skills, you could sell that to a lot of people out there, and they still thought, wow, that's amazing what you have created there. And for me, it was very important to learn that, because since then a lot of time has passed. So 17 years since then, more than half of my life I've been doing these kind of things. And now I have this very, very unique skill set that lets me build a full product from 0 to 1 without the help of anybody else. So I can do basically everything in a first version myself. And this is very, very helpful in a lot of other businesses that I have created over time. And this is why I always suggest also, I try to really support my nephews, for example. They are the bigger one is 9 years old. And I really want them to also learn some kind of basic coding skills, design skills and everything, and makes them really interested in these things, because I think it's even more valuable than a lot of the stuff that you learn in school today.
So you still believe that building coding skills, programming skills is something valuable these days?
Yeah, I know like a lot of new technology is coming up with ChatGPT. A lot of things are automated, but if you are able to learn the basics and understand the basic concept, I think you can also leverage the new technology in a way better way than if you just know how to use it. And so I would always still to this day encourage everybody to learn these things and really, really have also an interest in that.
So you started to build your own businesses in some way, but at another point, you also started to invest in other startups, right?
Yeah.
So where are you invested at the moment, and what do you do there in general?
Yeah. So the first investment that I did myself was back in 2018. So we had been building an education company before that, and that was quite successful and still is. So the company is still active. We were bridging the gap between online and offline tutoring. The company is called Study Help, and this was like my first big startup endeavor where we raised money ourselves from investors. We grew the team to in the highest times 30 people, also made millions in revenue and everything. And I was always so interested in seeing how the interaction between founders and investors works. And also I always wanted to be part of other businesses because I saw how motivating this was for myself, being a shareholder in a business and seeing it grow and flourish, and also supporting the company. And then back in 2018, a friend of mine created a new company, and he said, hey, we are raising our pre-seed round and want to have some of our friends and family on board. Are you interested to do that? And I have never thought about investing before that day, but I thought, hey, I trust this guy. I want to support him no matter if I lose the money or not. It's just like a journey that really, really is bigger than the, like, I don't know, financial outcome out of that. So I invested a little bit of money into the company and then supported whenever I could through like my experiences, but also introductions. And from that point on, I kept investing because in the end, what I learned with investing, it's a game. You have to be very consistent about it. You have to think about a number that you want to allocate in this like very, very risky asset class, and then pick, I don't know, 10, 20, 30 startups that you invest in with your check size to really, really pick the winners. Because if you just invest into one or two or three startups, the likelihood is quite high that you lose all of your money because they go broke or something. So I knew that from the day that I started investing. And to this day, I have invested in around 20, 25 companies all around the world, most investments over the last 2 years. And I invest in everything from software to education products, but also everything that is very, very community driven. And for me, the main reason to invest is to broaden my network, support the next generation of founders. And it's so much fun to see all these different ideas and also help the founders be successful with their business.
Hey, that's great. So because you already described your why, so why you're doing that. And I think that that's a really important thing in general. I'd be interested in how your equity or your equity interest in these companies is defined and what's your role in these companies in the end.
So if I think about my angel investing practice, I think of it as a professional hobby. So this is what I do for fun. And my expectations around this is that in the best case, I get a return out of this. But if I'm coming out of this with like a zero-sum game, so the money invested is equal to the money that I will get at some point, it would also be okay. Because through this kind of angel investing, I met so many fantastic people and got also so many other opportunities that it would be worth it. And in terms of how involved I am with the companies, it really depends on the founder. So obviously for a lot of the companies, I can't add much value despite my own entrepreneurial experience. So I always say to the founders, okay, my experience is opt-in. So if you have something you want to discuss with me, feel free to hit me up. We can set up a chat, or I can give you an intro to person A to person B, and we are good off. And in a lot of cases, to be honest, I'm also one of the smallest investors on the cap table. So other investors are way more important and probably also have way more experience. But in some other cases, I can help with my unique skill set. So for example, everything that relates to side product-led growth. So I know quite a bit on how to build these mini products that drive a lot of traffic to your website. Or I know a lot about startup fundraising because with base templates, I have run a business in that space and helped hundreds and hundreds of founders do that. And I always say to the founders, okay, if you want help in any of these very, very specific areas, hit me up and I will support you with whatever I can. But if you don't want to do that, that's also fine for me.
Yeah, you just mentioned base templates. Do you just want to go more into detail what you do there?
The base templates story is quite funny because when we were raising money for our first education venture study help, I had no clue what that really meant or how to do that actually. So we were only talking to a few investors, took the first offer, to be honest, and didn't know how, if the offer was good, bad, what the common terms were, and then realized through the process that not every business should be financed by venture capital. And also for you as a founder, sometimes it can be very, very hard because with venture capital, a lot of expectations come. Very like expectations like growing as quickly as you can or taking really a shot on the high scale and automating a lot of things. But we realized with Study App, a lot of the things that worked out quite well were not very, very scalable in a venture capital sense. Because as you can imagine, if a VC invests in your company, they don't care about like a 1 or 2x return on their investment. They want to have like a 10 or 100x because the winners need to cover all the losses in their portfolio. And during that time, I learned so much about venture capital and investing in general that I became very, very interested in that space and wanted to learn how it is done the right way. And during that phase, I was looking for a pitch deck template myself because I wanted to build a pitch deck for some kind of business. And then I found this great pitch deck template on a website that was called Base Templates. And this was this guy from the Ukraine, from Kiev, who was running the website and who created it. And then I bought the template, used it, was quite cool to use it. And then I learned somehow that he wanted to sell the business. And back then I was already like interested in these passive cash flow businesses, as I would call them. So I did a little bit of due diligence and realized, hey, the business that he had built was quite interesting because it was driving revenues, steady revenues on a monthly basis without spending a dime on marketing. So all of the sales were coming in organically. And at that time, I thought, hey, come on, I take the shot and I buy the business from him because I thought, hey, the risk is quite low and I had some cool ideas to grow the website, to have a new design and everything. And so I did it. And then after I signed the contract and wired the money and got the domain and everything, something really, really interesting happened. For 9 days after the acquisition, there was no sale on the website. So I was so afraid that I had bought something that would never generate any kind of revenue. But luckily, after that, it started to ramp up again. And since that day, I built up a whole ecosystem of products and content around fundraising. And it felt so natural for myself to do it because I made all the mistakes myself in the past. And so I could share my lessons, but also the lessons of the people that I talked to and worked with. And finally, Base Templates right now has like 3 main layers. So the first one is our content layer. We create a bunch of different content around everything from how to design your pitch deck to how to build a financial model, finding investors, also have a lot of these really cool mini tools. Then the second element is our templates. So it's not only a pitch deck template, but we also have an investor CRM, financial model, fundraising masterclass, online course, and a lot of other startup templates. And last but not least, for some of the more like white glove clients, we are offering services in terms of custom pitch deck design and assistance in fundraising and mentoring in a sense. And yeah, since 2019, we have helped 5,000 founders raise money for their startup, over 100 million raised with our help. And I still love to do it because it's really also in my purpose of enabling growth for others. And it's so great to share my experiences and help others to be successful in their fundraising.
Definitely sounds like huge impact. You also mentioned that getting funding isn't something for everyone or not something for every startup. And do you have tips on how people may find out if funding is what they want or what they need or eventually not?
First of all, I think the most important thing that you have to understand is funding itself is just something that helps you to become a sustainable business at some point. So I would always have like my unit economics in mind and see, can this be profitable at some point? Because my personal strong belief is that any business should create profits at some point. And over the last 2 or 3 years, I often had the feeling that it wasn't so important to have this kind of thinking in your mind with all the apps plopping up, raising millions or hundreds of millions without any kind of business model in your mind. I think also over the last 3 years, a lot through the media, like fundraising was the thing that you needed to do as a founder. So everyone was going out raising money, no matter the business model that you had. And if I think about venture funding in a classical sense only makes sense, in my opinion, if your company can be, I don't know, at least $1 billion in market cap. Because for most of the funds, everything else would be very, very interesting. And as you can imagine, this will only work for a very, very limited selection of business models. So for example, with our education company, it is a very profitable, sustainable company, but in the way that we had created it, it could have never been like this big. And this also led to some conflicts in our like scaling up phase. And thinking about this, I always make the example of a software business. So also for you as a founder, imagine you are creating a company. And you are creating a software company, I don't know, you and your co-founder, and you are making $1 million in recurring revenue. This is something that is quite likely that you can accomplish that because depending on the business model, it's not so many customers and it's quite likely that you get that done. And if you sell that company on the market right now, you will maybe get somewhere between 3 to 5x on the annual revenue. So 2 persons, 3 to 5 million, this is a life-changing amount of money. If you want to get the same amount of money out of a venture scale business, it needs to be, I don't know, 10 times as big or something. Because if you raise millions and millions of dollars, you will also, A, on the one hand, you will dilute your own shareholding in the company quite a lot. And B, even worse, you will have liquidation preferences on most of the investments, meaning that I don't know, you could have created the same company with $1 million in ARR, sell it for 5 million, but you raised 5 million, meaning that you will see $0 instead of 5 million for yourself. So oftentimes bootstrapping or building a company without venture funding could be more interesting for you as a founder. No matter what, there are companies that need this kind of venture funding and that need huge amounts of money, but then I would go full throttle and either you like get this thing off the ground like a rocket or you run against a wall and then shut it down. But it's really hard to go back from the like very, okay, you spend to a like more lifestyle business that is like running on a few people, few millions in revenue.
So if you raise funds, you basically either go down or you go up, but you don't do the same thing as before.
Yeah, for sure. And for myself, I made the mistake once that I thought, hey, we are just going to raise 1 round of funding and then we are going back to profitability. And I wouldn't say that this is very, very likely because in most cases, if you raise funding, you're going to hire a lot of people, you have more expenses. And in 99% of the cases, your financial model isn't working out and growth isn't as quickly as you thought it would be. And then you end up with like high fixed costs, but the revenues not as high as you expected them to be. And so you have to raise the next round of funding and it's really hard to go back to profitability after 1 round. So if I'm thinking about raising money from investors or specifically VC investors for my next business, I would either I need some kind of confidence that this can be really, really big, and then I would go all in.
What's your point of view on getting venture funding in a recession or at the beginning of a recession compared to bootstrapping a business?
From a founder perspective, if you have funding from your own clients, meaning revenue from your own clients, this is always the best case, no matter if you also want to raise funding from VCs or not. So if you can self-sustain your company, it's amazing. And it also helps raise funding if you really want to. In general, I would say now is the time to create the company, because also in the past crises, recessions and everything, some of the best and biggest companies of our time have been created. And I would also say this is possible right now. In terms of raising funding right now, most of the VC funds still have a lot of dry powder, meaning they have raised huge funds in the last 2 or 3 years, and they still need to deploy their capital, and they want to deploy their capital because it's their job, and they get management fees, they get their carry on the invested money, or the money that comes back in some way. So they still want to do it. But right now they have a little bit of pressure from the general public, but also their limited partners to be more specific about the investments they do. So maybe in the last 2 or 3 years, they would invest in a company just because they think, oh, this is a great founder and this is a great coin flip to do. Right now, it's better to have some very good metrics in terms of traction, revenue, profitability that makes it way, way easier. The best companies, or if you are a good company and good founder, you will still always get funding.
Does this mean in the past you could have get a lot of funding just for a great idea or a seemingly great idea, and now it's more about hands-on metrics?
Yeah, 100%. So over the last 2 or 3 years, you could raise funding just, let's say, a PowerPoint or something, or a PDF. And say, okay, this is what this will be. This will be the next social app, audio style or something. And investors were deploying their capital. Right now, they are doing a little bit of more due diligence, and also the valuations going down a bit.
Do you have certain plans regarding investments or in general activities for the coming year?
From an investor perspective, I think the important thing is, as the same as in the stock market, you need to invest all the time through the uptakes and the downtakes. So maybe over the last 2 years, I paid valuations that I would never pay right now. And I paid maybe too much back then, but maybe now I can invest into a company at a lower valuation. And in the end, I think consistency is key here. And you need to follow on with your investment, and then all will be good.
Then how does this look for you in practice? If you say you need to stay consistent with your efforts, it sounds like you'll invest in more and more startups. So what's your personal process of finding, sourcing startups and evaluating if it's profitable, meaningful?
Yeah, so for myself, I'm starting with my with my own asset allocation. So let's say I have a number that is my net worth or something, then I have a small percentage of that I want to invest into startups. And out of this percentage, I have already deployed some of the capital, but some of the capital I still want to deploy in the next years. So I can now see, I don't know, I have a 100,000 or 200,000 that I want to invest over the next 1 or 2 years. And I want to invest in at least 10 startups. And then I have the ticket size that I can invest in a single startup. And right now, most of my deal flow is coming through my network, most of the good deal flow. So I would say around 70%, and 30% is cold inbound that I'm getting. And I love to invest with my friends and fellow entrepreneurs, because in the end, it's also a social game, investing. And I love to talk about the business with my fellow investors, with my friends, and also make some kind of decision together with them. And this is what I want to continue over the next years. And the crazy thing about investing in general is you only know if you did a good job, 7 to 10 years in. And as I told you, 2018 was my first investment. So this is my 5th year now. And I don't have a single company that has been broke over the last 5 years, but there wasn't any exit yet. So right now, it's a big question mark if I'm a good angel investor or bad angel investor. We will probably see that over the next 3 years.
Then is there anything or any way people may eventually help you on your further journey?
Of course. So for myself, I'm always trying to share experiences. And if there is someone out there who loves to do that, I'm always happy to connect with the person, and also always looking for good deals, uprising founders that are building cool stuff and that are very passionate about certain topics.
So then where can people preferably find you to get in touch with you?
Yeah, sure. There are 3 ways. First one, Twitter @MaxFleit. And second one, LinkedIn. You will also find me there with my full name. And third one is on my personal website, maxfleit.com. There are also all the investments that I did in the past and a lot of like media stuff that I did. And if you are interested in building startups, investing in terms of the content perspective, I'm creating a lot of videos on YouTube. So weekly one video on everything from side product-led growth to tracking your angel investments, and would really love to see you there in the comments, in the subscribe button. And cool.
Then thanks a lot for taking the time.
Thanks.
Thank you for taking part in this Never Employed Chat. Subscribe to my YouTube channel for more interviews with business owners and investors, or simply listen to the audio version in your favorite podcast directory. Make sure to follow me on all your preferred social media platforms, so that you never miss life-changing business tips. You find me on every platform with the account name samhartmann.com. Start a business, become successful, and tell me about it. See you next time.